Well, good afternoon, everybody. Good afternoon, investors, and welcome to the November 18th, 2025 edition of Bull Sessions. My name is Mark Robertson, joined here by the magnificent mathematician from mid-Michigan, Ken Kavula. Good afternoon, Ken.
Good afternoon, Mark. But how's that volume? Any better?
You're sounding just a tiny bit hollow. Not bad, though. We can hear you okay.
Okay. All right. Then I'm gonna move the mic. Is that any better?
Yeah, that sounds pretty good.
Okay, great.
We'll get a second from Kim from Florida. Kim Butcher is joining us today. Good afternoon, Kim.
Hello, everybody. Nice and sunny here.
And your sound is good. And Matt Spielman from Houston. Good afternoon, Matt.
Good afternoon, Mark, and good afternoon, everyone.
And Matt, we are on the verge of snow once again up here, so you can commence homesickness again.
I even tried to get my wife to just picture walking in a snowstorm, and her immediate frown and reaction was, "Why would I ever want to do that?"
I think that's why you went to Houston, isn't it?
That is exactly why we went to Houston.
Well, one of my best friends in Chicago used to always answer that same type of question or inquiry with, "There isn't a fence around this place. You can head south." So good stuff. All right, so we are going to spend some time with the mailbag, literally digging up some of the questions that have been asked and using them to demonstrate some of the stuff that's going on. And we will update the Groundhog Challenge. We do have a new sheriff in town, a new leader. And let's just go ahead and get underway as we celebrate the approach of Thanksgiving.
Excuse me.
I'm sorry.
I'm ready to go if you are, Mark.
Okay. All right. And yes, that is Ken and I invading Buc-ee's from a couple of years ago. It was a thankful moment. All right, some of the stuff going on right now, we are going to get into this and at least touch the surface of it a bit. We are refreshing the website. We have to because the operating platform, I think that's the word for it, is ending or nearing the end of its useful life. So we do have to do an upgrading of the software that runs the entire Manifest Investing website. And at the same time, because I'm bold and courageous, we're also shuffling the data provider. And we'll talk a little bit more about that. But that's where you get two of my favorite actors. And I think probably a lot of you out there like Morgan Freeman and Samuel Jackson from Jurassic Park. And that's kind of how I feel some mornings as we get going. You know, throw the switch and hope that it turns back on. If you've ever done that with your computer, well, we're kind of in that mode, but no fear, we have an excellent technical guy working on this stuff, so no worries. Any thoughts, Ken?
You say that with a little bit of trepidation in your voice, Mark, the no worries part, okay?
Well, over the years, we have had a moment or two, but very, very few. And it's just amazing. I mean, the thing we did with the Motley Fool ran 100% of the time for nearly 20 years without an outage. So that was pretty cool. So we will hope for more of the same type of reliability as we go forward. All right, here's our quick disclaimer. No investment recommendation is intended. What is intended is we would like to share the lessons, philosophies, and methodologies of the modern investment club movement as we interpret them here at Manifest Investing and as they are lived out by the National Association of Investors, known as Better Investing, and its legacy of investment clubs, literally friends and family coming together to help each other learn how to be more successful investors. So that is all behind what we do here. We love demonstration, and it is important for all of us to realize you make your own decisions about things you do in the realm of investing. And again, our invitation, as you'll see here today, you guys send us some questions, we'll air them out. And if you have any more, bring them on. And we'll probably do this type of program a little more often if you guys like it. If you tell us not to do it, then we'll listen to you that way too. If you want copies of the slides or if you have suggestions for future topics, let us know. Those are our 2 email addresses on the screen. All right. A little bit longer today, Ken, but I think it was okay. All right. Here's our look at Portillo's. Yes, I think that is pretty near an all-time low for the hot dog manufacturer. I think a set of French fries, a Coke, and a hot dog are going to run you more than $4.65. So maybe buy the share instead. Can I say
Get it
that?
on the side. Get it as a bundle meal or whatever they call it.
I might use this picture as an example in some of my classes, Mark, you know?
All right, enough to go on before Kevin shows up and asks me, "What's your cost basis in Portillo's?" And I have to say I don't remember. Do want a few shares of it for the playful nature of it, but that may not last forever. All right, Ken, what do you think? We've got full 5-year time horizon on here.
You know, I think the market is doing what it normally does. I'm not particularly upset with the movement in the market. It seems to be well ordered. It's moving in an opposite direction than it's been moving the last couple of months, and that's okay by me. I really think that we have a fairly average market out there, Mark. I'm not particularly concerned.
Yeah, I do. I agree. I think it's pretty average, and I don't have a picture of the slide, but Matt had posted a picture was that from China, Matt, or somewhere in the Far East?
Yes, it was an experience of an American investor looking at a Chinese market price board.
And we found it fascinating that they kind of reversed the color. So spend a moment on that, Matt.
Well, so I don't know. I think I posted this in the thread, but very interesting discussion with a value investor who just did his first trip to China recently, maybe in the last couple of years. And in amongst a whole sea of things that I made sure George Mackey was the first person I told about it, because I think it was up his alley. A whole lot of forensic accounting, and in particular, this guy was actually the guy who blew the whistle publicly, gave the first sell rating to Nortel.
Okay.
But he said as he was looking at the screens in China, he noticed something weird, that as the numbers showed negative, the price movement of stocks, they were in green, and positive moves were in red. So in other words, were things getting cheaper and therefore a better buy, whatever the condition of the company, or they were getting more expensive. And it struck him very profoundly as a very basic assumption that sets your mood for the day, whether you see a bunch of red or a bunch of green. And so he promptly went to his tools vendors and asked if he could reverse the colors.
Okay. All right. Well, thanks, Matt. Yeah, we'll have to put a picture that I meant to grab a screenshot of it, but it's a perfect illustration of thinking backwards. I think Annie Duke would like it.
Yeah.
All right.
Or also that'd be a Charlie Munger thing, right? Invert, always invert.
Invert. That's absolutely right. All right. So basically a 10-year look back using our performance perspectives, and no major changes here. The 10 companies that you see listed are the ones most widely followed by our subscribers, probably most widely held by us as a collective or community. And again, those clustered indexes, many of them investable index funds towards that lower third, is just a reminder that, yeah, you can do that, and it is right for some people, but it's also possible to join with friends and learn to identify excellent, well-managed companies that are on sale. And that's what those 10 other companies basically consist of. They don't always work out. You get a CVS Health every once in a while, and maybe that's a temporary affliction. I think I saw where CVS was selected by Better Investing. Was that this month or next month? Anybody know?
I don't know which, but yes, you are correct.
So there's some faith in the continuing turnaround at CVS Health. by some people
That
that have a
is,
pretty good
that
track
is
record.
the December 2025 undervalued stock.
Okay, well, there you have it. Of course, the demonstrations that we like the best are the ones that basically take the methodology and bring them to life. Probably our favorite, I know it's Ken's, the Investing Roundtable, the Mid-Michigan Investing Roundtable, which we co-sponsor, has a pretty good track record over the last now 15 years, beating the market by a couple percentage points. And it's just proof that a bunch of friends who think a little differently, but along similar channels, if you want to think of it that way, can generate some pretty good stock market performance. Anything you'd like to share there, Ken?
I just think that it's interesting that a 15-year return for the total market is up to 16.4%. That's a little bit rich for what the long-term return on the market has been. And I wonder if our numbers, that 10% that we've held for so many years, is going to be rising slightly as we move into the future. We'll have to see. My gut feeling says there'll be reversion to the mean, and we'll come back a little bit.
Certainly reversion to that long-term trend. We might tack on a tiny bit. We could have a thesis level discussion for a couple hours on productivity and all that kind of stuff and make a case for a little higher number, but those 13.7s and 14s are not going to stay there forever. I'll go out on the limb and just say that's true, because I said forever. Can't be true.
And I still really believe, Mark, that 15% goal that we set for ourselves when we join an investment club, or that we think about trying to achieve, I still believe it's an extremely aggressive goal. And by looking at a portfolio that's doing 16%, not 15%, and it's only beating the market by a little bit more than 2 points right now over that long term, it points out how aggressive that goal happens to be. And I go back to my old saw, which is celebrate the fact, if you beat the market, celebrate it. You only got to beat it by a point or two to really be doing quite well in today's world.
Absolutely. All right, here's a quick look at some of the funds that we keep track of. Again, this is our reminder that these are the top 20 funds by performance over the approximately last 10 years. The exceptions are highlighted in that performance since column. So there's a couple that sneak in there that have less than 10 years of actual experience or performance. But you are now looking at what are the 17 companies and institutional funds that have beaten the market by more than 5 points over the last 10 years, and it's a short list. Keep in mind there's about 650 funds on our list, and you're only looking at the top 20. And this, of course, is our reminder that growth is important.
I'm sorry. Yeah. I've looked at this slide 5 or 6 times, Mark, and I didn't notice that growth number on number 1. Is that a typo, you think?
I think it's not a typo. I think that there's a number of companies in there that have NMF, or who in the world knows, for their projected growth rate.
That was my alternative explanation for a nuclear renaissance fund, NUKZ, especially a short-term fund like this, that it contains a lot of companies with no earnings, and therefore the growth number is kind of hoped for rather than actually calculated.
Yeah, when you've got SMR in there, and that one you basically just answer with a question mark, and then you've got companies like Emerson, which probably does have a 3% growth rate. Those type of companies are in there too. So that does explain it pretty well, really. But yeah, it's fascinating. We talked a little bit before the session. It might be kind of interesting. I think it might be more than interesting to go down to number 15. And they have an 8% growth forecast. So that's the type of companies. There's probably a lot of medium-sized companies in that particular fund from First Trust. They call it American Industrial Renaissance. And what I think I'd like to do is go back and see what they picked, like, I don't know, pick one of your favorite medium-sized industrial companies and see when they bought it and what it looked like at the time they bought it, because they've been able to generate some pretty powerful results with a growth rate that's typical of medium-sized companies.
I also am very curious, Mark, about whether or not the number of the companies in this particular fund have a significant yield attached to them, because remember, the yield can help make up a little bit for a slower growth in a company or in a fund.
All right, I'm jotting down my homework assignment. We will come back with that one in a couple weeks. Okay. All right, moving along. Here are our groundhog. It's a groundhog scoreboard update. We do have a new leader. Daniel has climbed back to the top of the list. There's been a little turbulence. There's a few people that were south of 50 that have climbed up into the top 50. I am hovering at 56 for those of you that are worried about me. So I'm there. I'm within striking distance.
Low number of people, Mark. Okay.
But Ken still is holding up the fort. So at 33. But
I have to look at Cheryl Carter's portfolio, because she and I have been writing within one or two places of each other now for the last 8 or 10 weeks. So I have to look and see if we're duplicating an awful lot of stocks in our two portfolios. That might be the reason.
Okay, we could do a side-by-side comparison, I suppose. And what have we got for clubs in the top 40? 6?
I think we have 9 today, and that's a very, very average number for this year.
Okay. Of course, the big news is the monkey has dropped into the bottom 10. He is now 200th, Ken, at minus 13.8. And we're okay with this.
We'll appreciate that, you know.
We didn't want to have to explain if the monkey ever wins our contest. And so we'll try to avoid that.
I want to call out my friend Sharon Saris, Mark, who was so excited to break the top 30 last week, and she's moved all the way up to 11th right now. Sharon is a member of the BI Brighton Investment Club. I don't know if she's still a director with the Northwest Buckeye chapter, but she was for a long time, I know. And she's moved up almost into the top 10 now. So congratulations, Sharon. That's a nice move.
Feel free to go for it. I mean, get up there. A lot of very familiar names on the list. We don't want to single anybody out and risk any of that type of stuff. But here's the number that's really kind of mind-boggling. This was 24% less than a month ago. So I'll just let that sink in a little bit. And by the way, the value line arithmetic average, terrible number, but it's actually closed the gap between that and the Wilshire 5000. So what that basically says that many of our community have been doing not as poorly as the market. Did I get that right?
I think so. Mark, I noticed today when I flipped on my TV for just a little bit of time that the Russell was actually positive today when compared to the other indexes. So maybe we're getting a little bit of move in the small company direction, which seems to favor us an awful lot, the portfolios that we tend to put together.
Yeah, anytime the small and mediums move up, we do better versus the market in that market comparison. All right, just a quick moment with the Buttonwood Bulls. This is our demonstration portfolio using real money, tiny amount of real money, but just to demonstrate that it can be done. We'll look at the portfolio on the next slide. The important thing here is that we continue to invest the money, and the portfolio average projected annual return is up to 14 now. So that green line is where we want it to keep growing. And we'll just kind of look the other way, and it's kind of like when you pull the stuffing out of the dressing or the stuffing out of the turkey and set it off to the side. We'll set that rate of return off to the side and let it cook for a while longer, I think.
My wife and I had an interesting discussion at breakfast this morning, Mark. We're considering an alt mark fund, all right? where we will invest as a short in anything you invest in as a long. Okay? And we're going to top the list with NICE for the moment, okay?
Yeah, that stings a little bit. That is a full position in the Robertson portfolio, and we're not going to show it here, Ken, but you are in fuego, on fire with the best small companies. I think the top 5 or 6 are yours. They're not mine. And
Well, I don't want you to talk about it then, Mark. Keep going, okay?
next slide. Well, here are the companies in the portfolio. Again, we're not going to spend a lot of time on it other than to say, how's the report card, sir?
Well, I think the report card is in wonderful shape. And remember, the report card is looking forward 5 years. If anything needs a little bit of, well, I don't see anything that really needs a lot of work. I would love to see growth at around 12 and a half, even 13, but I think 12 is a pretty decent growth. We're in the sweet spot on par. We're in the top quintile on quality. We're at about the 80% mark on financial strength and stability, both, which puts us in a good place. And we're doing it with, I think, an extremely reasonable composite PE of less than 20.
Yeah, I would concur. I think maybe there's a couple of these that are, for whatever reason, including NICE. I mean, we will talk about NICE a little bit here in a minute. Just not behaving well. And, when you have a company like that, and I'll single out Novo Nordisk also, that company has been down pretty hard. But from a long-term perspective, probably okay. Probably okay to accumulate as we have. We've accumulated a few shares of Novo in recent months. So, okay, we will come back and look at that one in a little bit more detail. Again, for those of you that may be fairly new to this, we kind of confine our decisions and full portfolio analysis to I think we're doing the second Tuesday of every month for the most part.
It'll work for me. And I still think our old friend Gentex is on the hot seat.
It is, but Matt did share that they did do a potentially interesting acquisition or merger just this past week.
Yeah, I know they've been working really hard to expand their business outside of the automotive business, and that would be a real positive thing in my estimation if they can do that.
We'll come back and talk about what potential that seems to be unleashing and put that in context. All right, Ken, here's your guy.
And this is Tom Lee from CNBC. He's a contributor to the network. He's on there quite a bit. He makes a lot of sense, and I think he invests the same way that we invest. He likes to focus on smaller and medium-sized companies. He's not adverse to looking at high-growth, large companies. And it looks like he's going to create 2 new funds here. He's going to focus one of them on just small and mid-cap, and the other one on just larger companies. The Granny Shots portfolio is, I think if he were in the 50s, he would have called it the Widows and Orphans portfolio, Mark. It's supposedly made up of safer stocks with a decent track record of not being as volatile as a lot of the market has been.
I would agree with that. And of course, we do track the GRNY. In fact, if we go back just a couple of slides, GRNY is here in the top 20, actually 12th. Now, it does not have a long track record. It's new out of the box, but it's been kind of fun to watch what Tom has been buying. And again, so far, so good. He did drop down from 5 to 12 in this update. But I personally think, because I looked yesterday and there weren't any holdings listed yet for the small and mid cap, GRNJ. But I do think it'll be kind of fascinating. And trust us, we will be watching to see what small and medium companies they build out that GRNJ with.
And today is its first day of trading. Today is November 18th, if I'm not mistaken, right?
Right. And I looked at my sources to see if we had any hints as to what, because I assume that there's something in the fund already. We'll see. we'll see where they start, what they start with, then we'll obviously be tracking Tom and the performance of that fund. Well, both funds, but we'll pay a lot of attention to that small and mid cap fund. All right. No, it's been just a couple of minutes talking from 35,000 feet about the transformation and refreshing of the Manifest Investing website. We're calling it version 5. And that, again, that has to do with the platform that the entire system operates on. But what you're seeing here is just a screenshot of what the top will look like of the homepage. The public page will actually go through a transformation that will be much more useful and informative for somebody who is curious about Manifest Investing without being a subscriber. So we really do look forward to this as it rolls out. We've been clicking through some of the stuff. Kurt shared a few slides that I thought we would share. Again, this is just from 35,000 feet, the type of stuff that is going to be enabled. I was really surprised today when I went back to the homepage on the test site, and it was already populating automatically. I had not done it. I hadn't done anything to cause it to happen, but all of my most frequently visited dashboards were at the top of my homepage. So the homepage will become more specific to all of us as independent users. You can switch between, these are called cards. A lot of websites use this sort of thing, but you can actually switch back if you prefer a table presentation. So you have that flexibility. It's up to you. And it's just kind of interesting to see how he has gone through and found some interesting things like, a screen which looks for triple play candidates that are in the sweet spot, etc. So this is the type of stuff going on. We're going to try to not be too disruptive with the appearance, but some of that's natural. You just got to grit your teeth and find the stuff that you're after. We will obviously have orientation sessions and probably a user's guide that we should have had 20 years ago. So
Mark, I do have a question from not somebody in this audience, but somebody in the audience at the club last night. Will there be any focus on core scores? Will you be able to deal with core scores in the new site?
Oh, definitely. I mean, that'll be part of the display. I'm not sure exactly what the handling will be or what the person asking the question wanted to be able to do. I mean, screening on core score will be retained for sure.
Well, I guess I'm getting to the place where are we going to be able to add columns to a dashboard at will, or are the columns going to be all fixed?
He's doing some of that. He's limited by the amount of real estate that we have, but there is some user-defined activity going on at both.
So there will be at least one or two columns where the users can insert a value that they think is important that Manifest covers, like core score, for example, and have that appear right on the dashboard then.
Yep, he's working towards something along those lines. It'll evolve, but yes, that's an example of something.
Okay.
I know Matt has talked to him a little bit about that kind of stuff. So, all right. So again, just giving you some images. Other stuff like, I mean, some people, especially younger people, love to switch to a darker background. So that will be enabled. You basically will be able to customize. I think he's got a slide in here that actually addresses color blindness and font size and things like that without messing up your display and your printing capability and all that sort of stuff. So it should be pretty interesting. Here's some of the user preference things that are embedded in the settings menu. And I can't tell you how many times people have asked for a font adjustment that would not mess up their display for printing, that sort of thing. And that appears to be addressed pretty carefully.
Another printing thing, Mark, will be the ability to maybe turn your dashboards into high contrast. That tends to give you a better print as well.
Absolutely. All right. And then here's one just for kicks, just an example. This is not necessarily final form, but he took and displayed the sweet spot over time. This is for Apple. So you could look at the return forecast for Apple versus the sweet spot. I think it's kind of a fascinating way to look at it. And again, this is some of the tinkering that's being done with the treatment of the Chronicle type information. I mean, the Chronicle stuff is all right here. We're going to try to figure out how to display that and put it to even to more use in the company report structure. So good stuff all around. It's coming, and we are shooting for a few weeks out. I know I shouldn't say that, but that is the objective. All right. Anything else you'd like to add to that, Ken?
No, except that send your questions or the things that you'd like to see. Send them to Mark or send them to me or address them to Kurt directly. Mark can make sure Kurt gets email,
Absolutely.
and we'll see if we can include some of these things that people have had on their wish list for quite a while.
Yep, I'm going through now and looking at wish lists, and we'll see what we can do. It's got a tremendous amount of flexibility compared to some of the systems of the past.
Kurt also has opened. There's actually 2 discussions about the new interface, but a wish list, a place to stash your wish list, is in the support and suggestions forum.
And he's gone back and looked at all of the customer support and the inquiries that have come in, and it's going to be good. All right. So with that, I thought what we would do is take a look at. I'm showing about 2:30, Ken. So I'd like to just spend a little bit of time on a couple questions. This one came in, and we get a few of these type of inquiries, and it's escalated a little bit in recent weeks. I know Ken has received a few expressions of concern from a few people, and there's been a little bit of disruption in the fundamental data that is behind the site. So you can read the question. I mean, they basically want to understand, well, what is that date that is on display, and how does it relate to changes, and why are some of them different, et cetera, et cetera. So to answer the first question, I'm going to start with the lower left corner. I mean, I think we need to rename this. We've talked about this previously at Bull Sessions, but it's not a matter of updating the fundamental data on that date. That is actually a date when we use the cycle. You know, the value line comes out in 13 separate issues. We basically use a new issue as a nudge for us to audit the situation for a particular company, and that is the date that appears. However, I would point out, and sometimes this is recently painful, the data is actually continuously updated, which is really, really cool until something misfires. Okay, and just recently, and one example was Google with the GOOG versus GOOGL. We had a tremendous difference erupt between the two, and the reason was they decided to zero out the earnings for 2025 and 2026, and that obviously made the two side by side pretty different. I think, is that fair to say, Ken?
It's very fair to say. I'm in an investment club that owned the wrong Google. We owned the one that really ended up being disrupted, and all of the numbers were just way out of whack, and it caused the stock watcher for that stock a lot of pain. That if she would have made a phone call, we could have eased her fears about what was going on, but instead she spent a lot of time trying to do research, trying to figure out why the numbers, trying to validate the numbers she was seeing, and she was having a very difficult time because they just were flat out bad. It was as simple as that.
Yeah, and all I can say is I'm sorry. I mean, one of the things we ran into, and I wouldn't be surprised if it's the first time they've had a disruption like that significant in their data in the last 20 years. And it just happens to coincide with our site redesign and the data shift. So issues 13 and 1 actually had some pretty unusual numbers in them. And I really think it was a hiccup, a temporary gremlin. I certainly hope so, or we'll be doing something different. But to answer the question, I mean, keep in mind that the average time between audits, I mean, it's 3 months from one to the next, right? So you're going to see some dates that are 3 months, 4 months, and every once in a while we skip some. Sometimes I don't have enough hours in the day for some of this stuff. But
Excuse me.
we do our best to keep them up to date. Keep in mind, and again, with the value line data being the background data array for the site, they are continuously changing. So for example, if tomorrow morning Value Line decides that NICE needs to have ratcheted down expectations, even though it's not their time to be quote unquote fundamental data updated, that will happen in the background. So that happens continuously, and it'll and the other thing that I would point out is, one of the reasons we decided to do this was the analyst consensus seemed to be pretty turbulent, pretty optimistic, pretty pessimistic. Heck, I'll just say erratic. And I was trying to figure out a few months ago, how is that helping us? And I think, Ken, you remember the morning when we were sitting there scratching our heads. And I just said, how, what is that actually doing to to help us make decisions, good decisions? And I don't think it was helping. So that's why it's pretty much gone.
The other question, Mark, that kind of is going hand in hand with this particular question is, does the company get added to the manifest database as soon as Value Line decides to cover it? And I think we'll both take a little bit of the blame for having other things to do besides watching which companies end up being new to Value Line. And as soon as we get back to the place where we have a couple of spare moments, I think we'll be feeding each other those new companies and making sure that they're included in the database within a reasonable time after they appear in the first Value Line, whenever that happens. But
yes.
We can get the data pretty easily. It's printed. It's easy to find. It's just a matter of going and making sure that the company actually gets an initial evaluation to be added to the database. So we'll try to clean that up in the next month or two as well.
Right. And the other thing to keep in mind, there's about 5,300 companies in the Value Line database. So a lot of times those companies will be in there as either one of the extended companies or companies that are not covered by either the standard or extended edition. But turning that on is a lot easier. It's an easier process. So I expect to see some process improvement in that end of the business also.
Mark, we have a hand up. Ann Manning's hand is in the air. So Ann, you're unmuted. Go ahead and ask your question.
Okay, well, yes, this fundamental data thing has always confused me too. So you're saying that basically day to day, we need to ignore that date.
It'll tell you the last time that it was updated, with the quarterly update.
But see, that's what I don't understand. I mean, if how can it be updated if that's the last time it was quarterly updated?
Well, maybe, oh boy, I'm not sure what to call it. Need to think about that.
What's wrong with
Because I don't understand how the numbers on the equity page for a company on Manifest, how can it be updated if you have to, like it needs an update in 1031, but yet you're showing 831 or something like that. So is it updated on the Manifest equity page?
Most of the time, yes. I mean, you think of the situation like with NICE right now. Let's say that the NICE systems was last updated a couple of weeks ago. So the date would be, let's say mid-October. But if they come out with their supplemental adjustments, that will actually flow into the data. And it's almost as if we need two dates on display, an audit date and the last date that the fundamental data was changed.
So the fundamental data is only when value line updates.
It doesn't necessarily have to
true?
be just value line, but yeah, any time that any field is updated outside of the cycle. Keep in mind that is just what you see with a value line date, that October 31st date as displayed here is simply our nudge to audit and make sure everything's okay.
Can I try a different explanation and see if it helps, Mark?
Okay.
Ann, are you familiar with the value line site itself?
Oh, yeah.
And you know that there's a site that you get to when you first open the page up for the company. And then you can also get go to the PDF site and get the most recent PDF, right? You know that, right?
Right.
And you're aware that the PDF data does not necessarily reflect all of the electronic data that's immediately available when you open the company's site, right?
Okay.
I think that's what Mark is trying to say, that he's trying to on every time the new value line sheet comes out, he's trying to update the data based on what the PDF says. And then from that time forward, the company will update itself, because a lot of times that data on the front of the value line page, the electronic data, is not in sync with the latest PDF, because they update that electronic data whenever they need to.
Okay.
Okay, so really what Mark is saying is that this is the date that he's displaying right here is the last value line PDF for this company,
Right.
if in fact it exists, because remember, Manifest also covers companies that aren't covered by value line.
Right. Okay. So let me understand. So you're saying that the manifest page could possibly have updates that are not shown as far as the PDF.
Correct.
Probably
Okay.
will have updates that aren't shown.
Okay.
A simple example I'm thinking would be is if you had an investors day, a company had an investors day, but they had updated all the fundamental data a month before, then Mark's site is going to have the investors day information in there. Is that correct, Mark?
Okay.
That will happen. Yes, that will happen naturally.
Okay. Well, that makes more sense, because I couldn't understand how you could have the manifest is updated, but yet the fundamental says 1031.
That's why the words in the box are just wrong. That's what I have to figure out a better way to describe it.
Okay.
It's
All right. That makes a whole lot more sense. Okay. Thanks so much.
You
And
bet.
I have found when visiting groups, Ann, I have found that many people did not realize that the electronic data that they see in Value Line is different than the most recent PDF data. The only time that it's identical is on the day the PDF is released. And then that electronic data continues to update itself as Value Line feels it's necessary to do. And the PDF stays consistent for a quarter until a new PDF comes out. So there's two sets of data, if you will. And I know we're used to looking just at the data on the PDF, but when we're looking at what's going on in Manifest or in Value Line for that matter, we're looking at much more recent data many times than the PDF includes.
Okay. Yeah, that makes a whole lot more sense, because I couldn't understand how they were different. And that makes sense. Thank you.
Yeah. And, not to muddy the waters, but then when when the process breaks down and they actually foul up the numbers for the last week or two, that's where it gets a little bit hairy. So please, everybody, take a deep breath. The best thing you can do, and we've always said this, is just make sure that the information you're working off of is as current as possible. Be mindful of the number of analysts that are covering. We had a situation where a single analyst was covering a company and just drove the numbers crazy. I think that was Innovative Solutions. And that was one analyst changing their mind that basically changed the outlook for the company. So be aware that that can happen also. All right, let's keep pressing on. This one is a little bit of a common problem that I just want to make everybody aware of. We do, as Ken was talking about earlier, you can actually select to have an email digest sent to you every night, and you don't have to have them all. That I check most of them, but you can actually get a nightly digest email. Now, the problem that many of us experience is that the attachment that is described in the email digest, the attachment is gone or not there. And it's not because Mark forgot to put it there. It's because either the internet service provider or the browser or something is protective blocking or stripping it away. And that's way beyond our horsepower to chase all of those down. I hope you guys can all appreciate that. But you can retrieve the attachment just using the forum. So it's there in the forum if it's missing from your email. And oh, by the way, I do think Kurt will probably enable ticker specific email requests. So you can actually set up for a digest. If we write something about Apple and you want to be in a digest form, receive that Apple correspondence, that's gonna be a possibility also. So just wanted to make sure that you understood that. So yeah, you can dive in and go straight to the forum. As Nick posted last night about NICE, the company that we've talked about, he's demonstrating there, just simply asking an AI agent to give a situation analysis for what's going on at NICE. So again, if you're running into a situation where the attachments are not there, it's because somebody is blocking along the way. And that happens with traditional email also. We have trouble with password confirmations or password changes because the systems out there block them and make it impossible for us to communicate with you. And it's a real nightmare.
I'm going to add another twist to that idea also, Mark. I find that my internet provider allows certain attachments up to a certain size to come through, but once they reach a certain size, it blocks them. So it can also be dependent on the size of the attachment as to whether you're going to get it in the digest or not get it in the digest.
That's a good comment. For the most part, we try to do minimum size PDFs of all the events like roundtables or bull sessions, but every once in a while that will creep up and basically trigger those protective measures, and it's just something to be aware of. But in every single case, at least so far, I'm knocking on wood, if you went to the forum, you can retrieve what you're looking for.
Mark, how does somebody sign up for these digests right now on the current site?
On the current site, they're under the settings, under help. So when you're in your My Account, that's where I took the picture from, under the help to the far right, under My Account, you can actually find these settings. And the new site will have something very, very similar. Okay?
That should answer the question for the folks in the audience that asked it, okay?
Anticipating, huh? And again, here's...
Oh, they already have asked it, so I asked it out loud, that's all.
Okay. And again, if you go to the homepage, if you're not familiar with the forum, all of these are basically forum entries that it's kind of used as a publishing mechanism. So you can see the subjects covered and featured on the homepage. So just keep in mind that that is always there. If you're not familiar with the forum and you're out there listening, I would encourage you just to spend some time looking over the stocks forum and the general discussions that go on, just so you know that that is going on. That would help you in deciding, what you want to see on a regular basis. All right. Let's do this one out there just to remind everybody that Netflix is in the middle of a 10-for-1 split, and we will probably, I'm knocking on wood and throwing salt over my shoulder, we will probably find a way to handle this site-wide, but right now you would have to adjust your dashboards. 10-to-1 split, and that can be quite disruptive to dashboards. So fix your number of shares outstanding on those. All right, here's another question that we get every once in a while. Can you clarify what happens in your own personal Groundhog Challenge entry when something is bought out and taken private? So here you see Skechers, which went away a few weeks ago. This happens to be Bill Harvey. He's in there at number 24, so he's a threat to win it all. And what happened was, I don't remember exactly who took ownership of Skechers, but probably a private equity firm. And you can see that it basically is locked in on the date that that happened. So you're seeing kind of a sneak look behind the scenes. This is how we keep track of every Groundhog entry. And the numbers that you see here are continuously dividend and split adjusted. So that's how we basically keep track of it. And no, I don't spend 8 hours every night calculating the numbers. It takes about 8 seconds. Okay. Anything else there, Ken?
No, we're not getting questions, so I think it's clear, Mark.
Okay, let's talk about monolithic power for just a minute. This is one of those where I think we basically ran into the analyst consensus going crazy for a while. And we've had a few of those here over the last year or so. And they're basically making the point that the numbers can be all over the map. And what is the source of the data? Well, right now, the source in the past has been a combination of, value line, Y charts, and all that kind of stuff. That will be switching to value line, so it will resemble more typically the non-GAAP numbers. And that's not a bad thing. That's actually not a bad idea. And I think the person asking the question here is right. And you can see that with this most recent update of the fundamentals of this company, you basically do end up with not a negative par, but a low single-digit par, which would agree pretty closely with the value line forecast. Got to be careful with value line on early stage and fast growing companies, but at least it's there for comparison purposes. And interesting story. I mean, the stock price has taken off. That has driven the return forecast, the projected annual return, down. And that is because of the surge in stock price. For the most part, this is a tough study. So I want to point that out, point out a couple other things that the projected annual return does reconcile fairly well with the projected return on value. And there's a real question out there on the far right, with whether you look at sales or whether you look at cash flow. I think Value Line's probably being a little conservative with their 3 to 5 year forecast. Time will tell. But that also opens the door to just us reinforcing one of the other changes we are basically making is we really do want to keep track of the shares outstanding trend. We really care a lot about trends as part of our demonstration efforts here at Manifest. And you can see here, that fairly flat trend. You can see that Value Line is at 46 million outstanding shares. The math behind this actually brings this one in at 45, so that's a couple of % difference in the earnings per share calculation. I would encourage anybody not familiar with this subject to go back and take a look at our bull session discussion on thinking about the shares outstanding trend very carefully as you do your preferred procedure in a stock selection guide, as you do a stock study, which basically takes each piece of the income statement and makes assumptions. Making that assumption about the shares outstanding is probably one of the most important calculations we do, and it receives probably the least attention of many of the calculations that we do. So just, have that thought.
Yeah, just to insert, if you are going through that level of detail as appropriate, you can turn on this graph in your stock selection guide as well.
Absolutely.
By clicking on the legend and see something similar.
All right. So that is part of the change that we will make. And here's your reminder that we do archive all of the sessions on YouTube for bull sessions and our special sessions and the roundtable. So you can, if you just go to YouTube, search on Manifest Investing or Roundtable or Bull Sessions, you will find this page. Go back and get them. And with that, Ken, I'm going to give you an out when it comes to Christmas on my Christmas wish list this year.
New shoe.
You seem to be balking at the Ferrari, so I've decided that maybe a new pair of shoes is in order. So just
curiosity, Mark. What does a pair of shoes like that run?
I don't know. That's for you to find out when you're figuring out what you're going to buy me for Christmas. I will look it up though.
Are they actually available for people to buy, or are they just a special set, Mark? Do you know?
Oh, if I find them, you're going to be the first to know.
All right.
Good stuff. And Ken, I think I've decided that with all the stuff we're doing, I know that you personally know that I'm burning the candle at both ends thanks to the data disruption and the work that we're doing on the website. So I think next Tuesday we'll take the day off and prepare for Thanksgiving. So there will be no bull session next week, but we did want to take this opportunity to wish all of you investors and our community of friends a very happy Thanksgiving.
You're hearing a huge sigh of relief from me and my wife, Mark. Thank you. Okay.
Well,
And some of us who have got other people coming over, yeah, we appreciate it.
yeah, I was just on the phone with a friend who is already beginning his Thanksgiving travel, so you know how that goes too. So with that, we do wish all of you a very happy Thanksgiving. If you found our treatment of the questions here to be interesting, take us to the next level. You always do. What do you want to know about? And we'll try to see what we can do to help you out. So with that, happy Thanksgiving, everybody.
And my wishes to all of you as well. Be safe. If you're traveling, watch the roads, and join us again the Tuesday after Thanksgiving.
All right. Take care, everybody. Travel safely.